Welcome to the Bitcoin panel. And we're very excited. We have a great panel today that I will introduce very briefly so that we can jump straight into the questions and then leave some time for Q&A. So we're going to use Pigeonhole. You guys can log in. We'll take some questions at the end. Let me introduce our speakers very briefly. So Adam Draper from Boost VC invests mostly in Bitcoin startups, if I'm correct. Jeremy Allaire, Circle Financial, which is based in Boston, consumer-facing Bitcoin company. And Adam Ludwin from Chain, which provides infrastructure services, so Bitcoin infrastructure services to developers as well as financial institutions. So please welcome our panelists. What I thought we'd do, so we have 3 or 4 questions that we'd like to get perspectives from our speakers. So we'll let them take about 2 or 3 minutes to provide their perspectives on these questions. And then, again, we'll open it up for Q&A with the audience. So without further ado, we'll jump straight in. By the way, I'm assuming everyone in the audience is familiar with Bitcoin at some level.
Yeah. How many people have Bitcoin?
Oh, good question.
You should be pitching them on Circle's wall.
There's $10. There's available to everyone.
You can sign with Circle. There you go. There you go. But don't tweet it, right?
Don't tweet that.
Yeah. We don't want to give it to. We only want users that will actually use it properly.
Absolutely.
Okay.
Get it and send it to someone.
All right.
And you'll use it.
And how many of you know what Bitcoin is in general? Okay.
Yeah,
so for the rest of you,
it's
Bitcoin is like a normal currency, except completely different. It's digital and doesn't have a central bank. You know, it's only as valuable as the transaction.
It's everything, but it's nothing.
Yeah. It's mostly, it's mostly drug dealers, but not really. No longer so. Okay. Why don't we get started? So first question, and this is great given the diversity we have in the companies represented in the panel. Think of Bitcoin. There are 3 opportunities. So consumer side, merchant side, and maybe infrastructure side. Consumer, so merchants, a little bit all around, right?
It's clever how you guys do.
Perfect. So the question here is like, which one of these do you think is most valuable? You 2 guys are very biased. So why don't we start with a general VC perspective on this, and then we can go into the other.
Yeah. So I will. Answer a semi-different question, which is, I actually think all of Bitcoin is probably equally important right now, just for mass adoption to take form. We have backed 26 Bitcoin companies at this point. We've made the statement to make 100 Bitcoin companies over the next 3 years, and we're going to be probably hitting that in 2, so that's pretty exciting. But we've done everything from payment processors to exchanges to infrastructure to mining software to gambling thing. And so we've really done a really large spectrum of stuff, and it's really what we're trying to figure out is what the best use case is to get to that mass adoption period. I think exchanges and payment processors are the best business models right now because it's very transactional. You can actually make money when you either cash in or cash out of Bitcoin. However, I also feel right now we're in the middle of I call it repair mode of Bitcoin generation. Like a lot of people are talking about Bitcoin 2.0. I don't even know if we're at 0.02 because right now, so we've had this toy for about 5 years, like this thing that people used, and it got traction because of Silk Road, whatever it might be. And now we're starting to get real transactions happening. There are about 90,000 transactions, not on average every day, but on the high level every day. And so we're in this repair mode where we've had the toy, we've found that there are a couple flaws in that toy, and now there are companies like Chain. We have one called BlockCypher, which is competitive, and that are going back and they're trying to make it so you can scale Bitcoin better. You can build a company easier. You don't need to deal with the infrastructure anymore. That's really, really exciting stuff. And then also, payment processors. I can keep going, but I figured we might as well pass it off and see what they think as far as is really, really important. But basically, yeah, it's all really important is my thought. That's what I'm going to say.
We're saying which one's relatively more promising. So
promising, I would say the best business model is payment processors and exchanges, but that's generally that's also where all the money has gone. And so if you're going to be starting a new, are you guys thinking about starting businesses? Like, is this, raise your hand if you're thinking about starting a business in Bitcoin or just starting your business in general. Okay. I would move to where the puck is not yet. I would move to where the puck is going, and I don't know if it's going in because money's already gone into a bunch of payment processors and exchanges, and we continue to launch a few of them, but internationally, not locally.
Gotcha. Why don't we go to a very different perspective, Jeremy?
Sure. Yeah. I actually concur with Adam that we're still in the really early days of this industry, and when sort of asking the question like, do you focus on consumer or on merchant and so on, that's I think really based on the concept that Bitcoin is about payments, which is its first use case, it's its first application. It's not really been fleshed out fully, so it's usable yet, but that's the first use case. But it's sort of like asking, is HTTP better for consumer businesses or merchant businesses or or educational institutions, or I don't know. Bitcoin's just a protocol, and it's a platform you can distribute data on and conduct transactions with, but they can go way outside the realm of just financial transactions and the movement of financial assets. It's really ultimately we think Bitcoin becomes as important as HTTP as an internet protocol. And again, if you sort of step back, you realize, well, geez, that can touch a lot of different things, and it's not just about back when HTTP was created, it was how do we share scientific documents and link between research so that it's easy for scientists to learn more. So the original design was for that sort of information sharing, publishing use case, but people ended up building a lot more on top of it. So I think we're in super early days. I think relative to the infrastructure that's there today, I think. Similar to Adam, there are, for this initial payments use case, still a lot of problems to solve. And it's still not compelling for consumers to use for payments today. And there are a lot of reasons for that. So there's fundamental problems to solve. I think the capital that's gone in has predominantly been in the US. It's predominantly been in US companies. Some of the US companies want to build global companies, but it's sort of like saying there's going to be one bank in the world. There's tens of thousands of banks, and globally, the payment relationships people have are very geographic in nature oftentimes. So I think one of the biggest opportunities is taking some of the models that companies like Circle or Coinbase or BitPay and many, many others have sort of put forward and build those internationally and build those globally. And that's sort of the promise. It's sort of like when internet email came out, if you could only get email from one email service provider, well, what's the point? That was AOL. You want to have protocols that connect between institutions and connect them in interoperable ways, and that's sort of the promise of Bitcoin as well. So I look at that distributed nature of it, geographic nature of it, as a massive market opportunity, because companies like us cannot build the same kind of business in every market in the world. So I see that as very big. And vis-a-vis consumer versus merchant, I'm more interested in consumer businesses. I'm more interested in the opportunity to own those relationships and help those users with products. But that's, I think, just a personal bias, maybe.
I completely agree with the model that he's talking about globally and internationally. We've actually launched 5 different Coinbase of or Circle of in different countries: Mexico, Philippines, Singapore, Argentina, and another one that I'm blanking on right now. Philippines. Nailed it.
Yeah. Adam?
Sure. So first of all, thanks for having me here, and thank you guys for organizing. I'm HBS 2010 Section J, so it's really awesome to be back. Is there anyone in Section J here? No Section J? Is there a Section J anymore? Did they get rid of Section J?
No, we reduced it to 4 sections.
Oh, went to the other section. Okay. That's too bad. Usually you get like a cheer from like one person in the
You would
back.
have gotten the cheer early on
Yeah.
if there was someone.
So before I talk about like why Chain.com does infrastructure, I just want to say really quickly, since everyone here I think is most people here are probably students, Bitcoin is like the best field to get into, I think, for an MBA. And the argument for that is it's probably the most interdisciplinary field that exists. You have to really have fluency across like several different domains. So technology, finance, economics as separate from finance, consumer marketing, enterprise and sort of corporate level sort of thinking and understanding how big businesses are going to think about Bitcoin, as well as how startups are going to think about it. And also it's a field that is in dire need of like real leadership. So there are only a couple people in this industry like Jeremy who have really taken the baton forward and really like set an example of how to build a great company in the space. And that's because several of the first movers were sort of hobbyists and tinkerers, and while they sort of understood the technology, it's not clear yet whether they can turn that into really commercial viability and really make an industry of this thing. So we need more people like Jeremy and Adam, and I think lots of those types of personalities and thinkers are in this room. So if you like interdisciplinary sort of things and you get excited by lots of different classes and you think of yourself as an entrepreneur and you think of yourself as someone who's like interested in technology, I would just highly recommend you start with an internship with someone like Jeremy, and then you go off and build something because the industry really needs you. So Chain.com is an infrastructure platform. If you're familiar with companies like Stripe or Twilio or Heroku or Amazon Web Services, all of those companies take pretty complicated technology and simplify it so that developers can quickly, easily build something with it. So Twilio, for example, took telecom infrastructure, which is complicated for a developer even to wrangle, and they said, here's a simple API, now you can send text messages very easily. And so we looked back and we saw, the Bitcoin protocol was this very complicated, very counterintuitive in many ways, set of technologies and ideas, and it was a very low-level thing. It still is a very low-level thing. And so between that and getting to an application like Circle, there's a huge gap. And so we just tried to close that gap. We're trying to close it by simplifying it and putting a lot of the complexity behind an API and making it fast and secure and simple. So whether that's a better opportunity or it's just a different opportunity, they're all sort of, all of these things, as Adam pointed out, are necessary right now to sort of move the industry forward.
Okay. Why don't we talk a little bit about international opportunities? So I know a lot of us know, and most of Bitcoin development up to date has been, most of the action has been in the US, perhaps in developed economies. What specifically do you see as Bitcoin opportunities in more developing countries? So, for example, one that's obviously top of the mind would be international money transfer, right? I mean, which would seem to be a huge opportunity for Bitcoin, except that there are lots of challenges in terms of infrastructure. Like, how close is this? And I mean, are there other international opportunities that are?
Actually, the U.S. is the worst place that the payments part of Bitcoin could have taken off because we're 93% digital already. When they create new money, they just type the number into a computer and print more money in your bank accounts, ideally. The best places where Bitcoin can really actually add value are places where they don't trust it. But like, we trust our banks pretty well, actually. And we believe that our money is pretty safe, but there are places in Africa where there's 10% bank account adoption and 90% cell phone adoption. Or actually, I just heard that Egypt has 120% cell phone adoption. So like, they have more cell phones than people. And so that's a place where you don't trust your banks, and you have this method of being able to access the internet. And you're able to actually send money, and it's sort of a distributed way to store money. And a very good I always use it as an example just because it's something that actually happened in the world. But the M-Pesa, has anyone heard of the M-Pesa? It's a payment method in Kenya that's cell phone to cell phone that's based on airtime minutes. And so the Safaricom in Kenya realized that everyone was cashing in and cashing out of these airtime minutes, like they were actually using it as a form of currency in stores, in merchants. And they could have shut it down, but they didn't. They didn't for two reasons, I think. One is that one of the princes in Kenya actually owns 10% of Safaricom. The other one is that it costs money to print money, and they said, well, we don't need to print more money. That's pretty okay. Let them do whatever they want to do. Now it's 36% of Kenya's GDP. So it's pretty interesting that this type of thing does exist in the world. So I think globally is where it's really going to have, it's going to bring the third world countries up to our level of trust for a system of payment, I believe.
Adam, just one, so since we're talking about M-Pesa, it's an awesome example, but can you clarify a little bit how Bitcoin, I mean, it's not as easy as it sounds. So something like M-Pesa is actually probably necessary in order to have, for example, international transfers through Bitcoin. So can you elaborate on that? So other countries, so M-Pesa is very special in many ways. It's in Kenya, but many other developed countries don't have something like M-Pesa.
Yeah.
I mean, M-Pesa makes it easy, actually, to some degree, to connect with Bitcoin.
Oh, yeah, because it's electronic.
Yeah.
Yeah. Yeah, actually, so a place like Kenya is actually a perfect place for Bitcoin to take off, especially for sending remittances. I actually think remittances is going to be one of the major first use cases of Bitcoin, whether it's consumer to consumer, business to business. You will be able to send money for cheaper globally. I think Western Union is about to have
one way to think about the international piece, and is sort of like think about the internet itself, right? You have protocols that if you have a computer and device, you can connect and use them. And we added more protocols, additional layers. Email, for example, was just a way to interoperably connect all of these different siloed messaging systems. And HTTP was a way to surface data and information to anyone who had a computer. And I think Bitcoin adoption internationally should take a similar course. And when you look at what it's replacing, I mean, right now, each country has its own ledger. And that ledger is a ledger of ownership of assets in the local currency. And most people rely on that for buying goods and services and receiving income and paying taxes. And all these ledgers are disconnected. And so the ledgers get connected through electronic means. There are centralized private electronic means like Visa and MasterCard that connect those ledgers. And then there's government-run ledger systems like the ACH system, the SEPA system in Europe. And all over the world, there's all these disparate technology standards for basically sending messages between addresses and moving value on a ledger. And so what I think is, from a global perspective, the opportunity is for businesses to be created that provide connectivity between that local infrastructure and ledger and a global network. And then just like with SMTP, if I send the email, I don't care if they have Microsoft Exchange or Gmail or something on the other end. Same with HTTP. I don't care what operating system, database, is on the other end. And so Bitcoin can play a similar role for how you move value and transfer value. The exciting part is that, like those other systems, it effectively move the cost of communications, the cost of information distribution to zero. And so Bitcoin will do the exact same thing to value transfer. The cost of moving value globally will effectively drop to zero, I believe. And so when I think about business opportunities internationally, it's that's the basic problem that has to be solved. I think that there's different business models for that, obviously, in all these different geographies. But just enabling people to transfer value globally in an interoperable way is something that I think would be valuable, not just in emerging markets, in any market, anywhere where money moves. Just look at cross-border movement of money, business to business. It's like 10 trillion a day. I mean, it's just crazy the amount of money that moves between all these different disparate systems that are all proprietary and centralized.
Yeah.
So I'm not an expert on anything, but especially every country in the world and what they need or whether Bitcoin is going to be important there. I will say, back to my interdisciplinary comment, this is also a global phenomenon. So again, it just you should all go and work in Bitcoin. I'm sure all of us will hire anyone who's interested. So just one comment on the international dimension, which is a lot of people think about, when you first hear about Bitcoin. Oh, man.
That went up saying, "Are you Satoshi?"
Draper is.
Identify yourself. Identify yourself.
So a lot of people first hear about Bitcoin, they hear it's anonymous, right? Or it's sort of anonymous. And isn't that kind of creepy that people can go on the internet and trade for illicit things anonymously? It's like the cash meetup at the corner of the park at midnight, but on a sort of skeevy web forum or whatever. And that sort of totally misses the point of what the power of anonymity is. The power of anonymity is not that you're no longer beholden to a central government or bank. The power of anonymity is that the bank no longer has to know every single customer on their ledger. And it's actually the inverse that's more impactful. And so why does that matter? Most people in the world are not credit worthy in the eyes of banks. Most people in the world cannot receive or send large amounts of value or have a secure place to store that value because they don't have credit scores. They're not known by the financial grid that we all have the benefit of participating on. With the blockchain, which is sort of the underlying technology that underpins Bitcoin as this global financial database or ledger that Joe is referring to, the network doesn't care. The network doesn't care who you are. As long as you're on the network, as long as you exchange value, like you cannot steal, you cannot break the thing. And so therefore, you're sort of protected against counterparty risk or default risk. And that's a huge deal because now there's this possibility of enfranchisement for the rest of the world that currently can't really get on the financial grid. And that also includes, by the way, things that can't get on the financial grid. Like a light bulb doesn't have a credit score. It's like not efficient to do that. But a light bulb can exist, or sort of smart things can exist on the blockchain. Not today because we're not there, but conceptually, and can sort of trade and exchange value with one another in interesting ways. So that's really I think from the international perspective, really the most powerful thing. And if you invented money today, you would never invent like a bunch of countries randomly printing paper. Like you would definitely invent Bitcoin. It's just how do we get there? That's really the question that needs sort of your minds on.
Cool. Adam said he's not an expert on all the countries in the world, but I am. And Argentina is probably the best place to start something. Nice. They have a black market for US dollars there. We actually launched a company called BitPagos there. And also, it's a different culturally than the US, so Circle and Coinbase can't like immediately move in there and start something because they actually mostly do still use cash. And cashing in and cashing out is the hard part. But the BitPagos, Sebastian Serrano, he's the CEO of that country, and his presentation at Boost was, in my lifetime, he's 30 years old, 3 times my money has gone to zero in my bank. And it's very powerful. And like people who can't trust, like they experience 25% inflation year over year.
What's interesting is with those use cases, I think they're powerful. I think, we saw a phenomenon happen with social media, with Twitter and Facebook, where it grew internationally, and it gave people in countries more freedom of communication, and that was really powerful. It introduced democratic forces and energy. Some would argue led to supporting of uprisings and revolution. And that's really powerful, and some governments try to shut down those communications methods and so forth, or monitor them as best they can. Over time, this isn't like overnight, but maybe in 5 years or 6 years, when you have technologies like Bitcoin adopted, I think it's going to lead to similar situations, because in places where the government uses its control of the local currency as a form of financial repression on a regular basis, and people feel like their lives are being destroyed, they will seek out alternative methods. But that's really going to be challenging, because you're running very deeply up against state power, and economic power is, I think, more important to the state than just control of information. And so I think you'll probably see over time some pretty serious situations emerge, because a situation like Argentina, as soon as there's actual volume of transactions happening this way, there'll just be an edict that makes it illegal, and then people go to jail, and then people will protest, and these kinds of things can kind of spiral and steamroll a bit. But we're a ways away from that in terms of something like Bitcoin actually having enough utility value in those markets for people to rely upon it for day-to-day transactions.
It's really funny. In the like '95, when the internet boom was taking off, like what people have been saying recently about Bitcoin is like, in the internet, when the boom was happening, everyone had all the right ideas of what the internet could do. So like on-demand grocery delivery and all that type of thing, but we were 15 years from it actually happening. And so I believe that that's a similar situation to where we are with Bitcoin. I think a lot of people have these concepts of, but I was referring to web van. I was expecting a chuckle, but whatever.
Pets.com. Pets.com.
Yeah, pets.com. But I believe that we're in that phase of Bitcoin where everyone has the right ideas. Everyone has the right ideas of what the opportunities could be. But we have the internet, so things move faster. Like we actually have that thing now. But I still believe we're a ways off from the real fruition of these ideas. So if you do start a Bitcoin company, my suggestion is the suggestion I give all my startups, which is just live long enough.
I agree with that general point of view. No, I think I have to recruit and hire people all the time, and you want to get people excited with a big vision, and you want to actually execute towards that vision. But I always tell people this is going to take 10 or 20 years. Like, this is not, you cannot go into something that has such deep structural kind of implications and expect it to just change. I had this experience in my last business, Brightcove. I said the same thing, and the vision then was you're going to get all your television over the internet. It's going to be on demand anywhere, any device, blah, 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 and direct to your TV set as well. And it took 10 years for that to be something that actually mainstream users do, and still like 5% of viewing time of televised media. And so it's still tiny. E-commerce is 5% or 6% of retail transactions. It's still sub double digits. And yet we take it for granted like this is this massive thing. Most people go to stores still. And so I think something like this, it just takes a really long time. It's not to say you can't build really significant businesses, really valuable things, but like there's an expectation of like, oh, this is going to enable this to happen, and people expect it to happen literally like in months. And if it doesn't, then it's discarded as this is BS or whatever.
And it's so cold here. Why would you go outside to go shop? I'm so cold.
All right, let's move. Actually, so my next two questions were actually the questions that got voted at the top. So we'll move into those because I think they're pretty interesting. So maybe let's go. Let's start with the second one, and then we can broaden up from payments and finance. So obviously, the big question for Bitcoin startups in general is regulation. What are the big regulatory concerns today? I mean, some of them have been answered, and hopefully adequately and convincingly, but there's still regulatory uncertainty in this space. Like, what are the biggest concerns that you see?
Yeah, I'll try and answer that. We're right in the middle of a lot of that, and I would say overall, actually, I'm very positive about the regulatory situation in the sense that regulators around the world, in the U.S. and Europe and others, recognize this as a significant innovation. They see the benefits for businesses and consumers, and they want to figure out how to make sure that this can take off. And you go meet with people at the Federal Reserve or the Treasury Department, they're not big fans of big banks. They would much rather see competition, disruption, et cetera. They have mandates around financial inclusion and the underbanked and unbanked on a worldwide basis. So there's a lot of support for this industry in the US government in particular. However, the key thing is these are new entities, new kinds of businesses, new kinds of risks. And so a lot of what's happening, and New York's the sort of epicenter of that right now, is sort of saying, okay, for businesses that are operating in this, which businesses need to be regulated, which don't, and what's the appropriate set of risk mitigation rules that should be put in place. I think one of the big things was software companies versus actual financial intermediaries. And it looks, at least in the US, there's a real distinction. People who are building software shouldn't be regulated. People who are actually custodians of funds and are interacting with the existing financial system need to be regulated. And the rules to do that are actually really well defined in most advanced economies and are being applied. So that's specifically in sort of the payments-related use cases. There's so many other use cases like issuing securities using blockchains, creating new forms of commodities that are digital asset-based, and that is new. And now you're starting to see folks like the SEC and the CFTC and others look at that more closely. And I think you're going to see that cascade into a lot of other domains. How insurance is regulated, how auditing of financial transactions in entities is regulated. It'll cascade across a lot of things, but I don't view it as a major issue for this industry to be able to thrive.
Yeah, so I'll take it a little bit of a different way. The biggest issue for me, for Boost, right now is that we're launching 100 Bitcoin companies in the world, and banks won't bank them. It's like a huge, it's a personal strife I am dealing with. Luckily, we're like 90% of our companies have been able to get bank accounts, which is great. But and it's because most of them now, I'd say most of the banks are becoming more flexible with the software aspect. Or the companies will just write that they're a software company and they're not dealing with actual in and out of each other's different bank accounts. That's the problem. The problem is when you're dealing with other people's bank accounts. And Circle probably went through this, and so we have companies that are doing that though, and startups who haven't raised $20 million still need to be able to exist somehow. And so this is something that I don't know. Banks are the risk right now for the big banks doesn't outweigh the reward in order to bank these Bitcoin companies, because they feel that the Fed is going to look at them as facilitating money laundering in some way, or at least that's the thing that they're pointing to. I don't really know. I talked to a bunch of banks, and they're sort of, I don't know. It's like they're not really sure about Bitcoin yet. They're not sure if they should fight it. They're all over the place with it. But it's a big problem. So if any of you guys want to do something to solve my problem, I would really appreciate that.
If anyone could just start a bank, that would be great.
By the way, I looked into starting a bank. You don't want to do that either. In 2008, like all the bank regulation changed. We've actually consolidated from 14,000 banks in the US to about 5, and all because of that regulation. It's like really, really bad.
Yeah, so instead of working for Bitcoin startups, consider also going to work for the SEC in order to help.
Yeah, would love that. I don't know, yeah. Sort of, I don't know. I'll think about what the right thing is there. I don't have a solution, so I was just presenting a problem I'm having.
Yeah, but the banks basically we look at our banking partners as our principal regulator. We don't actually look at the government as our principal regulator, because it's the rules of the bank that actually govern what we can do. Most banks do not believe that if they have their banking system, their banking accounts connected to Bitcoin, that they can be compliant with the laws that they're bound by. And so if you talk to the general counsel or the chief risk officer, they'll tell you, because it's impossible to know your counterparty in Bitcoin, we can't actually do this because we'll break the law, and we don't want enforcement actions on our bank. And so, or they don't want the risk of, human trafficking being associated with their bank accounts, or whatever bad stuff you can think of. Now, it's not to say those things don't happen in the existing banking system. They do, to the tune of $2 trillion a year of money laundering in the U.S. banking system. So it's huge. But, they've got a lot of kind of, in their perspective, boots on their neck, and they don't want to screw around. That's the general philosophy of banks in this sector.
Well, how do you respond to that? Like, how do you reassure them that it's not as it's not like money laundering? I mean, there's a trace of the. I mean, you can actually take steps.
There's an enormous amount you can do. I mean, we are required to be compliant with the Bank Secrecy Act, which is the U.S. federal law. We're required to be compliant with international equivalent legislation and rulemaking from things like FATF and the European Commission and every country, basically. And there's a lot of work to do to be compliant with those laws, to be able to identify your users and patterns of transactions that might be suspicious, and investigate them and report them to the government. And so that's actually a lot of work. And in order to do that work, most startups can't afford to invest in that scale of legal personnel, compliance personnel, infrastructure, et cetera. And so then the banks say, well, if you can't do that, we're not going to do that for you. We're not going to do business with you. And so it does create a situation, unfortunately, where you need companies to have a sufficient amount of capital to be able to essentially be bonded to do that kind of activity. And it's a high bar. And I think what we've been arguing for in talking with regulators is to have a lower bar in terms of the requirements there that's risk-based, i.e., if you're dealing with a volume and velocity of transactions below a certain level, well, the controls are relaxed in this way or that way. But even then, it's interesting, the U.S. government that oversees agencies that oversee banks in particular on these issues have been making public speeches saying, we want you to give bank accounts to more of these innovative companies. Bitcoin-related money services businesses, other non-bank financial institutions that want to offer financial products. They've been making a lot of speeches around this, but banks are not listening. They're not relaxing those, and it's a risk-reward issue. They can make $10,000 from a client in transaction fees, but also subject themselves to potential criminal abuse and enforcement actions. And so the risk reward just isn't perceived to be there for banks.
What's really interesting, and it was just a good segue for me to plug a couple of our companies. What Bitcoin did was it made financial technology sexy. It made all the best engineers in the world want to upgrade our financial systems. Which is a really, really exciting thing. And so in this domain, we've had a couple companies who were trying to start remittance companies or some other types of companies, and they realized that all the Bitcoin companies were having a problem with AML KYC. And so they actually built a new that's anti-money laundering and know your customer rules, which all banks, but also Bitcoin companies who are dealing with different accounts have to deal with. And so they wouldn't have been caught dead building AML KYC like technology 5 years ago. But because it was supporting this new trend of Bitcoin, they jumped on it, and they're doing very extremely well, called BlockScore. We have another one that's trying to help you be able to, companies like Circle, like Coinbase, like anyone who's dealing in that space, track down sort of the bad actors in the space, being able to actually dive through the data that is the blockchain and find the bad people. It's like a Palantir for Bitcoin, if you will. So it's really interesting that it's not only spurring this new way of doing payments, but it's also spurring like this new services industry that's supporting the new financial technology sector. So
basically everything that everyone complains about, like if you got in with your section and you just destroyed Bitcoin and you filled up the board with all the problems, like every single bullet point is like a company idea. So like,
Nice.
Think about it that way. Like figure out, like there are more problems with Bitcoin than really any, like, so there's this existential question, like the whole thing goes to zero and like it all fails. But we're very close to the point where we're getting past that. Like that was true maybe a couple of years ago. But I think at this point, not only can you not uninvent the underlying protocol or technology, but there's too much momentum now. There's too much investment, there's too much interest, there's too much real work and research going on to really see it go the other way. So, but there are still problems. So like that should say like there are still huge opportunities.
In 1994, there was no commercial web browser. HTTP, the technology of the web, was a total joke. It was insecure. It was slow. It was difficult to get online. The internet was going to crash. I mean, it was a disaster. If you looked at it at face value and said, this is the future of media, commerce, and communications, you just laughed people out of the room, which people did, and they were wrong. And I think there is a very similar metaphor here. And more venture capital in the last 12 to 18 months has gone into Bitcoin, which is approaching now about $400 million invested worldwide, than went into internet companies in 1994. I mean, that's dramatic. And so we haven't yet seen the yield of that intellectual capital. We haven't yet seen the output of all of that entrepreneurship and innovation and technical creativity. So I think a year from now we'll be in a radically different place because we'll see the output of that. And we'll be just moving down the chain, as it were.
Chain.
Pun.
Nice.
.com.
Very nice. All right, let's take the top question. So expanding a little bit from financial transactions, like what other applications can you see? Maybe Bitcoin or blockchain technology in general.
Sure.
So other interesting applications that we can think about.
So just like, first of all, at a high level, you can't totally divorce the notion of Bitcoin from quote unquote non-currency applications. You can stretch it, but for the most part, keep in mind, like the whole thing works because of the blockchain. The blockchain is this decentralized, open ledger, volunteer network of computers arriving at consensus on what the thing is and what order of the transaction should be in. And there's an incentive in the system to run it. Like it's not run by a government, it's not run by a company. So what's the incentive? Well, the incentive is if you participate in the network as a maintainer of it, which is what the miners do, you think of them as maintaining the network at sort of a high scale, you get rewarded, you get paid out in Bitcoin. So you never really move away entirely from that sort of incentive structure or from the actual notion of a digital currency. But what people are talking about now is generalizing the notion of a financial transaction. And instead of there being a static transaction where I pay Jeremy 5 and then Jeremy pays Adam 3, instead we can relate to one another as parties through a smart contract. And a smart contract is so-called smart because like a computer program, it can take different outputs and give you different, or take different inputs and give you different outputs.
It's actually simple scripting.
Scripting.
Yeah.
Yeah, exactly.
But running on this network. Yeah.
Exactly. So you basically get this like big distributed global computer mind that has a financial incentive in it. And the way I just described that sounded kind of scary.
Brainiac.
But so those are the sort of building blocks. And most of this is research today. So when you read about things like sidechains, when you read about projects like Ethereum, when you read about sort of the improvement proposals in the Bitcoin protocol. Like a lot of this is still at the research level, so just keep that in mind as you're thinking about these opportunities. But the potential, the promise is that you can do things like like Jeremy alluded to this earlier, put financial assets onto a blockchain. So you could, for example, in Argentina, buy US dollars with Bitcoin. So you can put like synthetic versions of stocks. You could issue stocks or issue sort of digital currency native securities on the blockchain and trade there. You think about everything Wall Street does, conceptually you could move it over onto a blockchain. And the reason you can do that is because a lot of what makes Wall Street work are the corporate law firms that actually sort of contract these sort of assets to one another, contract the obligations of banks to one another, and the blockchain sort of is that contractual mechanism, but it just happens to be programmatic and digital.
It's the settlement system for all of those counterparty relationships, which makes it even more powerful. Because right now, the settlement of a stock transaction, behind the scenes, between all the banks and the owners, there's a huge amount of non-digital activity in that right now.
Yes. So that's one really sort of big, exciting, sort of even 50 or 100-year type of vision. But the beginnings of it are already happening. There are literally startups right now that are working on this.
I think one of the really powerful ideas that with this in general is you can think of just think about tokens on the blockchain as a kind of digital certificate that if you possess that token, then it proves ownership. And there's ways to basically using cryptography to let's say you've got a house that you own, and the house has a title associated with it. When you transfer ownership of a house, you got to go to a clerk's office, and you got to get lawyers, and they get in a room, and you sign all these documents, and then the title now has your name on it, and it's registered with the Office of Deeds, or whatever it is in a given town. You could essentially take title and essentially think of it as kind of encode the title into a provable electronic signature, electronic certificate, that if you have it, then you possess ownership of that object, of that house, of whatever it is. And so the ability to essentially apply a kind of digital certificate or token value to any physical thing, a car, a house, a lawnmower that you're borrowing from your neighbor with some kind of crowd sharing model, all these things can be accomplished in a way where that token, if you have it, you have it. It's a bearer instrument, and that's really powerful. And you can automate the business rules of those with smart contracts and allow for transfer of value in really smart ways, including into the physical world. And that's why some people are excited about things like blockchain merging with Internet of Things as a way to essentially orchestrate the exchange of value of different automated services that exist in physical infrastructure. So there's some that's the long-term vision and implications of this. But I think that in a few years, things like having a digital title on a physical property, a piece of physical property, and passing ownership of that digitally, globally, will be possible.
Yes. And so the reason we started Chain was for this sort of longer-term vision. And the reason we call it Chain and not like bit something or coin something
is to get a bank account.
Is because we needed a bank account.
Same here.
Yeah, sort of.
You're close, though. I don't know.
Well, yeah, it's because we wanted to help developers actually build the things that Jeremy is describing. And this year, like in the next 6 months, if you watch our website, like you will see products that we release that will let developers start scripting and actually implementing these ideas. And I'm sure if you register with Circle one day in your Circle account, you'll see all your deeds next to your account balances, right? Am I giving away your? So that's where this is going. And another idea that I like to share is people will use Bitcoin when they need to use it more than when they want to. So you'll sort of want to get this lawnmower. You'll want to be participating. Buying a financial asset, and it'll say you need to use Bitcoin, or you won't know that Bitcoin's being used because it'll be being used behind the scenes. But there are lots of other examples of where this is going to happen. I think in gaming in particular, like virtual worlds are becoming a really big part of the sort of media landscape. I mean, Oculus and the other technologies are sort of blending and merging. Say again?
Magic Leap.
Magic Leap, whatever the hell that is. And why would you use credit cards or like PayPal in those systems? You won't. You're going to use a digital native currency. And as those worlds get this is getting a little trippy, I know, but as those worlds get increasingly large and engaged, it's, the currencies that flow fluidly between them and the real world are going to make a lot more sense than the ones that you can only use in one place. So that's more sci-fi, but this is where the world is going.
All right, let's take another. What time do we?
We have 3 minutes. 2 minutes left.
We have 2 minutes left. Wow. Okay, so let's take the next one up and answer it in 2 minutes.
What does it say?
We each get 30
What
seconds.
does it say? What is my starting salary?
Zero.
Let's take the second one. Do you see Bitcoin mostly as a store of value in itself, as gold is today, or as an intermediary currency for financial transactions?
Let's answer that one in like 5 seconds and then do another one.
Okay. Yeah.
You go
This
first.
one's like-
It's just I think the best use case is an intermediary between different currencies globally.
Both. Has to have both.
Both.
I agree both, but the main one, I could use a Skype analogy right now. I'm not going to because we were going to take longer than 5 seconds. That's
So I'll take one that we haven't really touched on. So there's a lot of talk about volatility in the price of Bitcoin, and one of my favorite topics as well. So economists say, well, it's too volatile, therefore it's not appropriate for, it's just not, there's too much uncertainty.
There's going to be a bifurcation of the market. So people that want to trade and experience the volatility because they're market makers, they're financial institution, they'll bear volatility. The consumers won't. Consumers will not experience, unless they want to be exposed to it, in my opinion.
It's also a solvable problem. In the stock market, people solve volatility by hedging, and there are companies who are starting to, we have a company called Hedgy that seems logical, good name, that is hedging Bitcoins in order to flatten out it on the merchant side so that they don't just immediately cash out. Right now, all these merchants are starting to accept it, and they sell into the market, and then the market sort of drops a little bit because of that. And I think we're actually at a good point right now. I think we're sort of at a good float.
Yeah, I mean, I think it sucks. I think it's the #1 problem for consumer adoption and the payments use case, and it has to be addressed. And we're thinking about it a lot, and I'm sure everyone else is. So, and it is a solvable problem.
Should talk to Hedgy.
Solvable problem without having a central bank. I mean, that's kind of, the economists are pointing at this, see, like we told you, you can't have a currency without a central bank. So, and the answer is presumably you can do it with hedging products, which can be provided by startups. Companies.
There's no reason you have to expose yourself to volatility. Consumers that are holding
That's true.
Bitcoin and experiencing the volatility are currently not really choosing to because there's not great options, but I'm sure Circle will have a button one day that just says lock in where I am right now. And then on the back end, they'll just be trading, and it won't cost them anything, and it won't cost consumers anything, and they'll just be market makers behind the scenes. It's very conceptually, technically trivial to actually execute that. You just need liquidity.
And same for merchants, right? I mean, some merchants, I just want to accept Bitcoin because it's lower cost, but I don't want to be exposed to the volatility.
And today,
Bitcoin,
that's what they do. They accept it and it converts.
I can basically unload it as soon as I have it.
And what Adam 1 was saying earlier was that basically every problem with Bitcoin, which volatility is the problem for merchant and consumer adoption, can be a startup. It's an opportunity. It's an opportunity for someone to solve. And one of you can probably solve that.